Hello traders, welcome to the weekly outlook and setups volume 305. Iliya here, and as usual we're gonna jump into the markets, have a look what happened this week, and most importantly what we can expect for the upcoming one. So without further ado, let's check out the news and get to the charts. Well, the US government is still not functioning, so we are not going to be getting a lot of USD news releases, but of course we have to always monitor the news outlets, the developments between right now the US and China, and there's so much stuff going on that of course the market is always going to be moving. Monday just NZD and CAD news, nothing much. Tuesday we have Lagarde speaking here, then we have a lot of CAD news. Wednesday GBP CPI, very important if you're trading the pound. And then Lagarde speaks again 2 times, so that is nice. Thursday, existing home sales, so nothing much you can see from Monday to Thursday, absolutely nothing. And then on Friday, we actually get the PMIs. Okay, so usually the PMI days where we have, for example, French, German, Eurozone, GBP, and then USD, that tends to be a pretty nice day. What I see right here is CPI for the USD. Now, is this legit? It's not tentative, right? And also manufacturing and services PMI for the USD. All right, so is the government really shut down? Is this really going to actually get released? If so, then Friday could potentially be a really good day. But I do find myself not really looking at the economic calendar, especially these days, because yeah, even with the government shutdown and even since kind of Trump came in, right? The market is just volatile, so I did find myself like really not paying much attention to the economic calendar and just focusing on the charts, right? So with that being said, looks like a pretty nice week all the way until Friday. So definitely on Friday we should be careful and maybe even actually lock in, because the market can definitely make a big move then. All right, so without further ado, let's check out the charts. Fanatics, I spent 1.5 months putting together the Fanatic Bootcamp that is designed to help you exit the break-even stage with just 2 simple tools and 6 hours of content. Now, if you have been loving how I analyze the market in the weekly outlook, if you have been loving how I trade and how I think about the market, this is really going to show you everything that I do for an extremely small price. So we're going to be working on your mindset first, fixing your mindset, your limiting beliefs, and exiting your emotional cycles. Then I'm going to be giving you the 2 tools that I use, only 2 tools, so you're going to actually know what I'm doing in these weekly outlooks. And then of course I'm going to give you the process and the mechanics for it, so you can actually build it into a trading plan. So if you're interested, first link in the description, click on it, and I'm going to see you on the other side. Alrighty, as usual, we're gonna get started with the Dixie. Now let's reverse engineer it from my latest pretty much outlook. So what we have here, of course, is, you know, I always give scenarios. I never give it's gonna go down. No, we always have to look at both sides to keep that open mind. And you can see, yeah, we have these this hourly liquidity and the 2 daily bullish imbalances below us. That hourly bullish had failed and we had a hourly bearish, and I said, well, to me a very nice outcome, of course, will be to retest that hourly and then to potentially move lower. However, as you can see, I also gave you an example for a bullish scenario towards this liquidity point, okay? Now, I flow with the market every single day, if not every single session, okay? So, of course, the market came in here during Asia, reacted, and then broke the reaction here by the time I actually started trading on Monday, for example. And then after I saw this, and even, for example, your hourly bullish imbalance that was created immediately, that is long bias immediately. Where do you target? Well, this is the line that I drew in the last outlook, right? So this is the origin of the bearish order flow range, and this is what the market ended up attacking. And then from there, you can see, right, you just apply the same simple process, right? Does the market have anything to push higher from? No. So what it ended up doing, it ended up breaking that reaction here. And then what it ended up also doing is making a hourly bearish imbalance. And then since then, it has been, let me fix these things. It just has been bearish, right? Hourly bearish here, hourly bearish here, flushing, hourly bearish, nope, not one here. But yeah, overall, a pretty nice bearish week on the DXY. And of course, all you had to do is just flow. So let's see how we can flow right now. We're having an inside bar on the weekly time frame, so we did not exit the previous weekly candles range. So can we expect this week to potentially move? We could. Now, I want you to be, especially in the current conditions, I want to be extremely open-minded. So what I teach is, I don't teach these kind of, it's gonna go here, it's gonna go there, watch this level, it's gonna reverse from here, like watch 97, 800 and act as some sort of a magician that knows like some key levels that the market is gonna get respected. No. in the current conditions, you should absolutely be in the flow and have zero expectations because the market changes extremely fast. Right now, it looks like we're actually going to go bearish, right? We can see you can marry your bias and you can say, okay, DXY is bullish. We have all these daily bullish imbalances. We have our PD range. The market is going to go up. Well, no, it's going down. And if you thought it's going to go up, you literally missed out on 3 beautiful bearish days. And what we have right now coming into pretty much next week is we have these 2 daily bearish imbalances, but we also had 2 daily bullish imbalances last week. So if you're kind of spotting the patterns right here, the market just tends to change its gears and its direction very, very fast. So we're coming into that daily, what I would call reaction area, and we're about to encounter these 2 bearish daily imbalances. But you can already see, right, on Friday, I mean, Friday is usually like some take profit day, getting a little bit of a pullback, and we kind of had a little bit of a pullback with some folly bullish imbalances here. However, like, I wouldn't really like to go against all of that massive bearishness. I truly want to see minimum this imbalance to fail, even preferably this imbalance to fail. Okay, so if you want to learn how imbalances are failing on the different time frames, you can check out the bootcamp, the first link in the description. All right. But basically, right, you just want to see that the sellers are not coming in from that daily. So maybe either just blast through it, or either come in, maybe give a little bit of reaction, break that reaction, come in again into the upper one, give a little bit of a pullback, and then pretty much if you see, okay, the market reacted from that daily, but failed to push lower, so it pushed higher, then it came into that daily, reacted, but it's not reversing again. And if those 2 things happen, then of course you start targeting all the liquidity to the left. Okay, so here it's going to be once again extremely hard to give specific scenarios because I don't care, right, everybody. I'm not bullish, I'm not bearish. I care, really, like, I don't care, right? Because it doesn't pay me to say right now, okay, DXY is gonna go up. No, what pays me is to just show up every single day and try to decide where the next 4-hourly candle is going to go, right? So if I come during the day, during this candle here at 14 o'clock my time, which is when I trade, okay, and the market is coming, for example, from this OB here, it's making a lower high and we're targeting the liquidity point here, well, I think it's going to go down at that time, right? But maybe on Monday, I thought it's going to go up. So again, I really want to kind of drill this into your mind, because so many of you are focused on these kind of forecasts and you expect somebody to tell you where it's going to go. We do not know. Okay, so numerous things can happen here. The market can pull back into that hourly and then bring us into the daily, and then what happens from there, we don't know. The market can, of course, come into the daily here and start selling off into that hourly, and then what's going to happen from there, we also don't know. What I would kind of prefer to happen is for the market to kind of come in, right, react, and then break, and then start guiding us higher. Okay, and then of course you're going to start getting all of your liquidity levels. So in this case, this high, but before that high, you also have a little reactionary here when that's unmitigated bearish imbalance. So you should always be aware of those. But it's pretty hard right now to say anything, right? So am I bullish? Am I bearish? I don't know, right? Because if you actually try to make some sort of a conclusion if you're bearish or bullish, you don't, because the market has been choppy right here in the DXY for quite some time. So bullish or bearish, like for a moment we're bullish, then the next moment we're bearish, and then the next moment we're back flipping again. Okay, so that is the DXY. Now I'm gonna try to find some more clues within the other pairs to potentially build a more precise bias. But what I'm going to be looking for right now is these are my zones. These 2 daily bearish imbalances are absolute key to see, are they going to hold and push price higher? Okay, push price lower. So for example, tap in and start pushing price lower, or are they going to fail, which is then going to help price to push higher? That's it, as simple as that. So that is the DXY. Make sure to be monitoring these zones. Now let's see how the rest of the pairs are looking like, and if we can get to more conclusions. Here is your USD. Not an amazing kind of development. We moved during very random times this week. So yeah, but basically you can see what happened. We took out some massive weekly liquidity. The market closed with a folly bullish imbalance, and very similar to the DXY. Like, guys, I drew this in the weekend, right? So go check my analysis, right? So there. First scenario, we pop higher towards the liquidity. Second scenario, we pull back into the hourly, which actually happened, okay? And then we push. But what the market did is exactly the third scenario. There it is, right? It came into the hourly time frame, it reacted, and when it reacted, did it take out the high? Did it show us that it wants to continue? No. What did it do? It broke the reaction here, and when it breaks the reaction, what does it unlock? It unlocks liquidity number 1, and of course, liquidity number 2. Look at that. Right? So there are your trades. on Monday and Tuesday, the shorts. And then of course, after this, you have no idea what is going to happen. We just absolutely don't know, okay? If it takes out that low, is it going to continue going lower, right? What it actually did is it failed to make any sort of bearish imbalances, and then it just immediately flipped with a bullish imbalance, and then since then, it just has been bullish, right? And you can be taking longs. Okay, so do you need to do a lot of forecasts? Do you need to do like a lot of crazy stuff? Absolutely not. You just follow what the market is telling you. Now, of course, let's have a look what is happening. So we came in previous weekly low here, but an overall indecision candle. So again, are you bullish? Are you bearish on EU, right? Depends on how you look at it. If I really zoom out, I can say, well, okay, let's say I'm a little bit more bullish, but right now for how many weeks? That is for 15 weeks. We haven't done much. We're pretty choppy. Now, does that mean it doesn't offer opportunities? Absolutely not. It offers opportunities almost every single day. But yeah, right now we're having that daily bullish imbalance, which is again very similar to the DXY. We really have to see, is this gonna hold or is this gonna fail? I kind of feel like it might want to fail simply because this very recent bearish market structure I really like. I do see a little bit more of a optimism for the US dollar, but that is really 50-50 right now. If Trump makes a deal with China, I think that could potentially be a little bit more positive. But on the other side here, we have this liquidity point. So that is going to be the ultimate target on the daily. And yeah, right now we are getting into that daily imbalance. Now you can see on EU, we only have one daily bullish imbalance, while on the DXY we have two bearish imbalances. So here we also have that hourly zone. The market is running away from it. It is very likely going to be coming for that low because that is a weak low. Why is that a weak low? Well, because we had the hourly bullish imbalances here, all right, within that big push. But that big push is failing, so the market will then want to potentially, of course, attack the liquidity. And then we're going to tap into that daily zone. So again, everybody, what is going to happen after that daily zone is tapped? I've got no idea. And do I care? Absolutely not. So is it going to come in right now and starts giving me signs of reversals? Okay, I'm going to go long. Is it going to come in? Right, come in. Come on, I want to make this perfect, but it doesn't work. Come in, react into a hourly bearish, and then start flushing. That will be, of course, the second scenario. So we have to see, can the market also open bullish and pull back into that hourly, fail and reverse? Yes. Can it pull back into the hourly, hold and push lower into liquidity? Yes. So you can see that there are so many things that could happen. Okay, and now you're gonna say, well, we're just showing us like 1,000 things that could happen, and of course one of them is going to happen. Well, yeah, I mean that's trading, right? That is literally what trading is. You just have different scenarios, you have different situations, you plan for everything, okay, and then whatever happens, you just flow with it and you make money. Okay, so that is EU, right? So this scenario here definitely could happen, so I can definitely keep it up. But I feel like the market is getting with a lot of selling pressure towards this liquidity point and the daily. So I think potentially it might tap into this zone first. And then are you going to take longs from that? You definitely can, provided you wait for your lower time frame alignments and entry models. This bullish scenario here where it comes into the hourly time frame, it could also be nice, right? But without taking liquidity or without tapping into anything to fuel a move up, I don't think it's very likely. Okay, so I would prefer the bearish scenario here, and then from here I'm going to be seeing if it's going to pop higher, which means that DXY will pull back into these daily bearish imbalances and start going lower. So let's see. Or is it going to fail the daily? Well, again, everybody, we're going to see by the time Monday, Tuesday are developed. Let's check out GBP USD. Now here again, two scenarios, bullish and bearish, always thinking in terms of the two sides. The market had this hourly bullish imbalance. It tapped in, it tried a lot, but you can see that there is no pop, right? There is no pop. And then it just dumped. I think there was an opportunity, but it happened. No, it happened very fast here. Yeah, it happened kind of. This is not Asia. My Asian range here is wrong, so I have to fix it up a little bit. But yeah, it happened pretty much during Frankfurt Open. It just absolutely dumped. But yeah, so pretty much again, you can see one of the scenarios played out. So if you're here, if you're careful, if you see that the market is not really pushing higher, you can position yourself into short, targeting the liquidity, which is exactly what got taken. And then afterwards, okay, you'll just continue flowing. We have, for example, hourly bearish imbalance. Think, okay, we can potentially go lower. But immediately what the market does a couple of hours later is it prints a hourly bullish. And then it continues to show you that, hey, I want to go higher. Hourly bullish, invalidated that bearish leg. Then this became liquidity number one, and then liquidity number two, and then liquidity number three, right? It collected a lot of liquidity this week. So GU was nice. And here, another long opportunity. Very nice. Very nice trading. Now, the timings were always a little bit sketchy this week, but my community that trades EU and GU, they did take some very nice trades. I currently only trade gold for now, but gold also hasn't been developing very nicely, so might want to trade Forex a little bit. So yeah, we're sweeping the previous weekly low. We're having a bullish candle, but nothing much to extract from the weekly, honestly. And then yeah, we drop to the daily time frame. We have that same kind of situation across the pairs right now. We're having that daily bullish imbalance. This one actually tapped it already. Okay, so the opposing liquidity will be here. So we have 2 liquidity points on the daily. And yeah, so in this case, GU actually looks bullish. Why? Because it doesn't have any hourly bearish imbalances to potentially push price lower. It already tapped into the daily, and probably very likely on the 1 hourly time frame is giving you the entry model. Okay, so if that here was a kind of a normal day, I would be looking to potentially start longing that setup here. Okay, and that would be my first target right here, and then potentially the second target is going to be this daily high as well. So GU is giving me bullish signs. However, I don't like how the hourly time frame chopped in on Friday. I wouldn't be surprised if it kind of comes in, right? So again, you have multiple scenarios. This is your reaction from the daily. If it breaks the reaction with a very strong hourly bearish imbalance, that is going to be the target. Okay, if it comes in and sweeps and gives you the model, then we go higher, or maybe from here it can just pop higher and attack the liquidity points that we have. So there you go. Those are the 3 scenarios. Our job right now is to just show up and wait and flow and try to position ourselves pretty much within what the market is telling us. So that is GU. I'm slightly bit more bullish on GU, I feel like, because EU is like a very massively retracing here with hourly bearish imbalances. It kind of looks a little bit weaker. GU looks a bit stronger. So if you're looking to long something, if you're overall long bias, for example, or short bias on the DXY, then you better try to long GU, because for now it looks better. But I've spotted even in the current conditions that the correlation is not amazing. It's constantly getting cracked. Like suddenly GU is looking better, but then suddenly EU reverses and provides a better setup, and then GU chops, and then you say, okay, I'm gonna trade GU, but then GU starts doing shit, and then EU starts moving. It's always like that. Okay, so that is GU. Let's see which scenario is gonna develop. Well, Aussie dollar, this is why I kind of don't trade these kind of currencies, is because they have very prolonged periods of consolidations, and then just suddenly, whoop, we go very nicely, and then it starts chopping again. Now here I had a more of a bearish bias. That was the main liquidity target we can see right here. So what the market did is actually gapped up very big, and then that creates kind of an imbalance here. But then you can see this imbalance got tapped again, reacted, and then it broke it right here. And then after this, you get exposed towards the liquidity, and then liquidity got taken. It kind of reversed higher, but then it started chopping. So not ideal. I mean, pretty much the forecast was very easy to go towards that low. Now, how do we go towards that low? Right, we can see that we couldn't have known how the market is going to develop and whether it's going to gap down, but it gapped up, it made the imbalance, tapped in, reacted, broke the reaction, you traded short into the liquidity. Now I also kind of wanted to see a bearish imbalance to form, but yeah, with the gap it actually formed, right? So this is actually, we have it, but yeah, look at this daily time frame. Like gapped up, chop, bearish, bullish, bearish, comes in down again, sweeps. I don't like it. I wouldn't trade a pair that looks like that. And then I go to the 40 time from here. We have no imbalances. So it failed to take out this low. It stopped very close to it. Yeah, this is this is not tradable for me right now. What I would be looking for is for just some zones to be created, okay? Because we have nothing to work with right now. We don't have hourly bearish to say, okay, we're short. We don't have a hourly bullish to say, okay, we're gonna go to that daily. So literally, right, wait for the market to show you, right, where it wants to go. We have a target on top. We have a target on the bottom. We'll just freaking wait for the market to show you where it wants to go, and then you just track it on the lower time frames. You position yourself when the market shows you its hand. All you have to do is drop to the lower time frames and try to position yourself within that move, right? You don't have to forecast where the move is. You just have to wait to see, like, you always need to have a little bit of an early sign, right, what the market could do. So for example, let's say it breaks that high with an imbalance. Well, if that high is broken, okay, that is immediately exposing the rest of the highs here. Okay, so if you see that first sign of bullishness, then you can capitalize towards the next liquidity target. That's what I mean. Okay, so that is Aussie dollar. No bias, just waiting. Well, NZUSD kind of fulfilled the overall objective. So we had again that hourly bearish imbalance that was on the market closure. We opened up into it, right? And then just the market rolled down lower. Again, we were looking to target like the liquidity here, but if you zoom out to the left, there likely came to retest something here to the left. Let's see, what do we have? Oh yeah, we don't really have much. That is the liquidity. We have this sell candle here. Is that the actual reaction? Oh, come on, man. Yeah, I mean, kind of looks like it. But anyway, immediately looking at that one, I know that very likely it's not going to offer something. Oh, we have a weekly bearish imbalance. This is not bad. So we have a weekly bearish imbalance. That can be a potential target or a potential sell zone. Daily time frame extremely chopped up. Crazy chopped up. And then 4-hourly time frame also extremely chopped up. So yeah, we have liquidity here, let's say, and then the ultimate liquidity is going to be down there. And then of course we have a little high here, and then above that high we have the weekly imbalance tap. So again, as I told you on Aussie dollar, your skill is right now to determine where the market wants to drive you. Does it want to drive you into the weekly bearish in order to get short from there? Or does it just want to flush and drive it towards the ultimate liquidity? How would you know? We'll just freaking wait for a couple of hours for the market to show you, right? As simple as that. There is the bearish scenario, pop higher, retest. So you can be looking for imbalances here as well to definitely show you that momentum is also here, and then you can be looking to trade it. So that is NZUSD. Like Aussie dollar and NZD dollar are pretty unclear right now. I do like this weekly zone on NZUSD. So if it comes in right here, you can definitely look for shorts, but you can also look to trade into it if, of course, you can flow with the markets on the lower time frames. Alrighty, so gold is a little bit tricky. Now, this week I'm actually break even on gold. I only took one break even on my main account, but I'm currently developing a entry model. So you're gonna see, like, for example, I only traded on Thursday, actually was a break even, and then here I tested out some things with very low risk. So of course, still profitable for the month, but in these kind of crazy conditions, it's you really have to adapt, I feel like. And this is what I've been talking to my community in our webinars, is that again, you kind of have two choices. You're either just fine with the market, like not providing your setups and just waiting for it to stabilize, or you potentially like take action to try to maybe let's go trade EU, or maybe start like changing something very little. Okay, so currently I'm developing a little bit more of a trending model. A lot of my traders are absolutely destroying the Asian session on gold, because yeah, I mean, every single day the market just opens rocket. Asia opens rocket, it opens rocket, opens rocket, right? Opens absolutely crazy. So if you try to kind of trade the New York sessions here, you can see you are absolutely chopped up every single day, right here as well. So it just, for me personally, it hasn't been offered opportunities. If you want to trade Asia, you gotta wake up, for example, but that for me is like 2 to 3 a.m. I'm never gonna sacrifice my sleep. But yeah, anyway, so for example here, I said that I'm definitely bullish bias, and we were extremely close towards that liquidity. So yeah, the market just popped it, okay? And then after this, the rest is history. Just absolutely crazy expand. And I mean, gold is moving like a extremely nice stock right here, making 10% a week. So if you just bought it at the beginning of the week, you're making 10% a week, right? So that is it's absolutely crazy. It is making weekly imbalance after weekly imbalance after weekly imbalance. There is another one here as well, of course. Massively crazy candle from that bottom here. We're up what is that, 30%, I think. Yeah, 30%. A lot of uncertainty right now is going on, and this is what is driving this market. Of course, you know, when something goes up, everybody goes FOMO. Everybody wants to buy it right now. So a lot of money has been flowing into gold ETFs, physical gold even. I've been reading in kind of these gold outlets. They're starting to run out as well with physical gold. So it's absolutely crazy. It kind of looks a little bit like a bubble that could potentially burst pretty soon, but we'll see. Of course, I think the stock market could burst rather than gold. Gold can potentially continue climbing even higher. And right now, just for the first time on Friday, we actually pulled back into a daily imbalance, which is absolutely crazy. And we also made a hourly bearish imbalance. Now, does that mean I'm short bias? Absolute the hell not. All right. This thing right now is just going up. So you can say I'm just bullish on gold and I'm only looking for longs. Now, there was a short trade on Friday that I hesitated to take, which I regret. It was exactly from right here. Okay, 15-minute bearish imbalance. We're having the GOB here. It was a lower time frame entry model, beautiful, and the Asian range low was still intact. I didn't take that. Why? Because I don't want to take shorts on gold. Like, because that could have just very easily continued to make new highs. But yeah, it ended up turning into extremely massive trade. Like, it was a full hour trade if I took it. So I'm a little bit pissed, but of course I was happy to close a break even week rather than take a loss on a Friday. But yeah, so we're tapping into that daily bullish imbalance here, and coming into that we're having a hourly bearish. So I am bullish. Okay, I am bullish. What I want to see, but of course I'm gonna give you the two outcomes. I want to see tap into that hourly, react, break, target new all-time highs. All right, that is preferred scenario. And then of course we always have to look at the bearish one as well. The market might tap, start offering us bearish entry models, and then we can come into that reactionary here. And then of course if we get a little bit more bearish, then that can start exposing the lower daily imbalances. Okay, so let's see if this one is going to hold for now, which is very interesting. This to me right here just looks like a very nice dip. Okay, this is what we call on stocks, we have a dip. Okay, and usually you want to buy the dip. Okay, so knowing that gold is extremely bullish right now, I would absolutely say just short bias from that volatile zone. We are gonna go to 4K. Like, you got no idea. So again, let's see what's happening. I'm gonna be monitoring the 1 hour time frame, tap, react. I wouldn't be surprised if Monday right now just opens and it's just gonna go and make all-time highs. Absolutely possible. Okay, so that is gold. Nothing much to say about it. I'm definitely long bias. We have the zones, we have the plan, so we just have to wait for the market to open and we strike. USD not a bad delivery, honestly. So it was a little bit tricky. Now, of course, I had a bullish scenario and a bearish scenario, and I wanted to see a daily bearish imbalance on Monday, and we also had that hourly bearish here. And you can see kind of market came in, reacted, chop, but then it gave us this little bearish imbalance, and then since then it just kept shorting, lower highs and lower lows and lower highs and lower lows. Did we actually form a daily bearish? No, because it was a gap up, so invalidated the new daily bearish. But yeah, we ended up flushing, and I have this as the gap, so we didn't go there all the way there. But yeah, I wanted to see like the market pop lower with the hourly bearish imbalance, the market pop lower with the hourly bearish imbalance, which is right here. Okay, and a short, there is a trade, right? You're always gonna get, this is what I always teach my students, right, that are extremely FOMO to trade. Oh, they're not extremely FOMO to trade because I'm teaching them, all right? So they're definitely not FOMO. But if, for example, a new guy comes in and he wants to trade, and I was like, no, you are gonna get on every pair 2 weekly opportunities that are going to be high quality opportunities, usually developing, let's say, around Tuesday to Thursday. If you can only focus on these days and take that one trade and make 1.5 to 2R, and if you keep repeating that week after week, you're just absolutely going to become a killer trader. But everybody wants to forecast, everybody wants to trade every day, everybody wants to go where the market is going to go every day. And yeah, this is what keeps traders stuck for a very long time. So right now on USD JPY, we're having 2 bearish daily imbalances. That is very interesting. So are we gonna short into the gap? Let's see. Yeah, basically here we have this is kind of an imbalance here that we tapped into. So this is why we're reacting, because that whole thing, if I go on Oanda, which I think it removes the gaps. No, so which one did remove the gaps? FXCM? No, USD JPY, Forex.com. Yeah, there we go. So Forex.com actually removes the gap. So you can see this is actually right now a hourly imbalance tap. Okay, so maybe I should do Forex.com, but I have, okay, where am I right now? So use the JPY. But yeah, so this is basically right now a reactionary, but I want to refine it to the gap, because this gap can also be an important area to monitor. Now, getting into that daily bearish, we're having a hourly bullish. So what you have to do right here, everybody, is just, again, read the language of the market and read just who takes control. We can tap into that daily right now. We can sell off into the hourly, react, and then if we get the short entry model, we target the low. Okay, that is kind of the ideal short scenario. We can just come in, break that daily, react, give bullish imbalances. We target the higher daily, and then from there, we don't know. We are literally into the, just created that daily imbalance right now on the closure, and we're very close to it. So I don't think me saying, okay, we can open and pull back here and then come into the daily is relevant, because we're literally going to open and very likely we're going to tap into that daily. So then what is going to happen from that daily? Are we going to sell off? okay, and come into that fall, and then is that fall going to fail to go lower, or are we just gonna blast through that daily and then start guiding us into the higher one? Okay, so that is USD JPY. Those are kind of the two scenarios. Again, always bullish and bearish, and you just open up and you wait to see which one is going to take control, and you position yourself within the momentum of the market. Okay, and then of course that gap here is going to be very interesting to be targeted, because it's a pretty large gap, so I do think it can potentially get pulled back into. So that is UJ. Alrighty, let's check out the future. So ES, an overall kind of a sloppy week. There were some good days. So I had a profitable day and then a losing day. So I'm basically break even this week. But yeah, you can see we had this crazy flush here, and then the market tried to kind of tap into that fall. It tried to push lower, but then it pushed higher, and then again it chopped, and then it pushed lower, but then again it recovered like on Friday. So there was a pretty big indecision. And then if you go, for example, on the weekly time frame, you're going to see that within the weekly candle as well, we're still within the previous candle range, high and low. Okay, so it's going to be pretty hard right now to be making forecasts. Now, of course, kind of the same analysis remains. We have these two liquidity points. We even can add, for example, here the previous weekly low. We actually did form a daily bearish imbalance here, but you can see from that daily bearish imbalance, we're not like, I could even say that to me this daily imbalance had failed, because we came in, reacted once, we came in, reacted twice, and then we broke it. So then at that time I would have said, okay, I'm long bias, okay, but then the market just came in with a very massive candle on Wednesday. Yeah, so, and right now, if we again look into it, we are closing up on Friday with some quality bullish imbalances here, right? So does that mean, okay, we're gonna go higher and attack that liquidity? We're also tapping into this reaction area, but this reaction area already got candle 1, candle 2, candle 3, so it's failed. So I can say this here is a low hanging fruit if it's gonna go higher. But I would say, yeah, a little bit of uncertainty. Like, for example, I started seeing a lot of negative articles like a crash and bubble and banks, and like some company went bankrupt or something. I don't know, brands something, I don't know, but they are trying to cause a lot of fear into the market. And I even saw the fear and greed index actually fell into the fearful category. But yeah, the market is still oscillating. It's still trying to kind of figure out what's going on. So currently it's pretty hard to make a forecast. I can say this to me is going to be a very nice quick trade. But if you have seen some of my trade breakdown, which I didn't do this week, because yeah, I don't know, didn't do them. I saw that they're not watched a lot, so maybe I'm not gonna do them. I'm gonna keep them for my community only. But yeah, I just don't look too much at the hard time frames. I just show up at 10 o'clock Eastern and I just trade, right? That's it. So what is going to happen? I don't know. I'm, however, looking forward to buy some stocks. I'm already buying some of the bigger names that are in a very nice drop. So yeah, that is ES. Let's see if we can find some more information from NASDAQ. Well, yes, Nasdaq also quite the same, kind of a pretty nice consolidative week. You can see in the weekly time frame again an inside bar. So are we really gonna pop next week? We could, okay, or are we gonna enter into consolidation? We also could. Now here I'm gonna refine that daily to that quality to a daily imbalance that the market kind of tapped in once, 2 times, 3 times, 4 times. It doesn't seem to push lower, but it also doesn't seem to also push higher for now. So a pretty consolidative week. But then again, that doesn't mean that there were no opportunities. There were, okay, there definitely were, but again, not the perfect ones. Yeah, so here again we swept, like for example the previous daily high. When did I take my win? Was it on Thursday? No, on Thursday I missed the trade during the webinar. There was a nice short here, but yeah, there were definitely some moves. Like on the short side here, the market tried, but then it tapped into that reaction, it reversed. Then again, when it tried to go higher, it swept, and then it reversed. And then again on Friday, kind of it also popped higher very nicely. So yeah, pretty 50-50 right now. And you can pretty much see it within price. We have that quality bullish imbalance here very recently. Now that can potentially be liquidity. So if we happen to pull back and go higher, that would be a very kind of generic setup that I would give. Then of course the market can definitely validate that and go for the next liquidity target. Let's see, okay? When the market is in a consolidation like that, you again just don't know, okay? Just don't know. So again, always track it, always flow with it. Because whenever you get like the first sign of something happening, that is going to be your best opportunity. Because sometimes, of course, you can be too late, okay? And of course, oftentimes, if you try to forecast too much, you're going to be too early and you're going to be on the wrong side. So that is Nasdaq. Yeah, consolidation not clear. And yeah, pretty much US 30, pretty much the same, right? So not gonna waste too much time on that one. Again, daily bearish imbalance here. The market is trying to kind of react from that for an eternity. Came in once, reacted, broke it actually. And then, yeah, it still came up to take out that liquidity, which is the origin of that bearish push. And then, yeah, it actually gave a very nice bearish push. So again, when the market is in the consolidation, it kind of goes from liquidity to liquidity. So right now, the last thing we did is we took out this liquidity here, and we're building a folly bullish imbalance to give us some sort of a bearish momentum, but we're also tapping into that bearish imbalance to the left. So it's really mixed up. So all you need to do right now is to literally flow. Okay, so it's gonna drive us higher into, for example, this low hanging fruit here, or is it gonna, let's say, drive us lower, tap into the folly, fail, and then drive us into the opposing liquidity? Because in the consolidation, you're just trading from liquidity to liquidity, and it should not be looking like for a very big trend. Okay, just in and out. So that is US 30 as well. Across the board, indices are choppy, consolidative, so we just gotta wait. On DAX, we can see a very nice pullback here, a very nice dip. And in fact, it actually, looking at it on the volatile time frame, it did offer a volatile setup here. And then it very nicely flushed. And it's taking us right now into this weekly imbalance that we drew last week. So really coming deep into it right now. And then on the daily time frame, let's see. So we kind of came into the weekly, reacted, came in again, reacted. So 3 candles we react. And then the final candle really dipped very deep here. There are no daily bearish imbalances, for example, here to push price lower. The volatile time frame, however, is kind of in a downtrend. So if you're looking for longs on DAX, I would say there was a lot of talks that the European indices are dropping as well, and we can see within DAX. If you want to, all of these should be red. Oh, god damn it. If you want to be looking for longs, I would say you have to wait for all of these to fail. So these forward bearish here, you can wait for them to fail. Okay, so already 2 of them are tapped. If we react and break and then like this, then it can drive us towards the low-hanging fruit liquidity number 1, and then of course liquidity number 2. But then if it starts kind of rolling lower as well, like where could we potentially go on the daily time frame? Like that is the liquidity, but that is very far away. Currently we just stopped at taking this liquidity here, and then of course the next ones are going to be right there. So again, always have your 2 scenarios, because that one can potentially continue with the weakness, and it can continue attacking some liquidity levels. So for example, we can draw them all to have an expectation of where price can potentially stop and give us, for example, a pullback. So yeah, this is DAX. Okay, so these volatile bearish imbalances are the determinant for next week. So you gotta wait for them to hold or fail, and whatever happens, we're gonna flow, for example, in the direction of them or against the direction. So let's see. So to throw a little bit of a recap, of course, we're having a very volatile time right now, but it's rather uncertain. So we're having daily bearish imbalances on DXY, but we're having a lot of, not a lot of, we have 2 forwardly bullish here, and it's kind of a little bit 50-50 right now. Are these daily going to hold and push price lower? Are they going to fail and resume that recent uptrend? This is kind of really a very key question for next week. Euro USD also getting a little bit short bias here, but again, it's also having a daily bullish imbalance. So is it going to pop, or is it going to resume with that overall trend? Is this a lower high formation? Like that is the question literally for next week. And again, as I always say, we just gotta wait and see what's gonna happen. In the meantime, GBP USD is looking a little bit bullish. It had a daily bullish imbalance, which it tapped. It doesn't have a forwardly bearish imbalance to stop it. So I'm really looking to see if it's gonna take control over the longs, or whether it's gonna come and break this reaction here under that low and then attack the liquidity. So again, we gotta wait. NZD dollar and USD dollar are pretty sorry, AUD and NZD USD are pretty chopped up, so we gotta wait for some sort of a breakout here. Gold is pretty clear. I'm just bullish bias on gold. We're having that forwardly bearish imbalance. In order for me to long, I'm gonna look for that one to fail, okay, and then continue higher. But if that holds, I'm gonna look to continue lower and target the lower imbalances. USD JPY is also a little bit tricky because it has like that sell-off here, creating 2 daily bearish imbalances, very similar to the DXY. Okay, they kind of move hand in hand. So again, the very big question is, are these going to hold? And of course, we have the first one that is going to get tapped immediately. Is it going to sell off and then invalidate that forward and go lower, or is it just going to destroy it and drive us into the higher one? We gotta see. EJ and GJ, I don't think I'm gonna analyze them anymore because they are just extremely choppy pairs, and I don't trade them at all. So yeah. And then of course indices, they ended up consolidating very nicely this week as well. Not a lot of clarity, just sweeping highs and sweeping lows. So we got to be waiting for some more momentum breakouts, and of course reading the news outlets to see what is going to be happening. And then DAX also having a very nice drop this week in a very trending manner, which is something very nice. Is it going to continue lower? We got to watch these forward bearish imbalances. Does it want to resume the uptrend? We want to see these forward bearish imbalances fail, and then of course target the opposing side of the liquidity. Okay, so that is with the outlook, everybody. Hope you had a great week, because there were some very good moves, especially for trading the major pairs. Hope you are also capitalizing on gold. Let me know in the comments what you're looking for, and I'm gonna talk to you on the next one.